Fantastic. Okay, so good morning, everyone. Welcome to the next instalment of these monthly breakfast meetings. For those that have been before, welcome back. And for those that are new, so you guys know I'll be holding these sessions every month on the last Wednesday. And I'll be presenting on a different topic all on finance, essentially helping to promote better financial education, but also helping you guys to make smart decisions when it comes to managing your money and your finances ultimately. Be running for about an hour. Please feel free to ask as many questions as you want throughout the session. I don't want this to be just talking at you guys, so let's keep some two-way dialogue going. The purpose of today is, or the topic of today rather, is going to be around planning for the tax year end. So what opportunities might there be to help you guys save on the amount of tax you're paying? Okay. What I'll be quickly doing in a minute as well is getting everyone here to introduce themselves, if that's okay. I'd love to know kind of what brought you here. Also, if you've got any pertinent questions as well. I know, Marla, you've already brought up some a moment ago. My agenda, I feel like this topic is quite timely for two reasons. First of all, obviously we've got the end of tax year coming up on the 5th of April. So we want to be thinking about some planning opportunities there. But also we've got the budget coming up next week on the 3rd of March. Now, quite clearly, because of the pandemic and everything, the government are going to have to start raising some more finance, some more money by way of increasing taxes. So I'll be kind of talking about briefly what the future of taxation might look like in this country. Whether or not that happens now in March or in October, because obviously us as business owners, we want to be knowing what changes there might be coming up so that we can start planning around that also. And I'll be finishing the workshop on a tax health check exercise that I've been using with a number of different clients. And basically this is essentially just a guide, a tick box exercise, if you like, to make sure that all the areas are being covered for your unique situation, as I say, in order to help you save on the amount of tax you're paying. So that's my rough agenda, but obviously I want to make this as much about you guys as possible. So as I say, ask as many questions as you like. And without further ado, I'm just going to quickly go around the room now and get everyone to introduce themselves. So the first on my screen, I have Laura. So just quickly, who you are and what you hear today would be great to know. So over to you.
Yeah, so I just started a business as a virtual assistant. So I will be doing my, well, not this year, I guess. Oh yeah, I will be doing my first like tax returns really. So just some guidance would be great.
Brilliant. Sorry, my pen's literally just run out at the worst time. Okay, so you just started your business. So just some tax planning ideas around that, really. Fantastic. Well done on starting in such a weird environment. How's it all been going though? Well, so far?
Yeah, it's good. I mean, it's only been a few weeks, but I've got clients and got quite a lot of interest and things in the pipeline. So yeah, it's exciting.
Fantastic. Brilliant. Thanks for that. Lana.
Yes, thank you, David. I'm sorry, I'm without video today.
It's okay.
But yeah, good to see you. Very hot topic, and yeah, I'm interested basically to find out a little bit more how financial advisors can help my clients, because I do regular sort of year-end sessions, talks with my clients to see how to plan for tax and how to help them. So, and today I'm hoping to hear some useful tips, and so I can recommend my clients to IFAs easily. Thank you.
Yeah, brilliant. Okay, so I think for you then, you know, as I said, the tax health check exercise that I mentioned would probably be useful for some of your clients.
Yeah, exactly.
So that's a kind of useful exercise to go through. Brilliant. Thanks,
you.
Lana. Marlo, I know you mentioned something earlier. You obviously just sold your business.
I've sold my business. I'm actually an investor. So I look at business acquisitions, but I look at the SME space, and look at trying to get the emotional value as well as the financial value for owners in acquiring their businesses. So yes, I've just sold mine 2 weeks ago, one of my businesses 2 weeks ago. And so some tax advice around that. But I think it was more just to learn what was available out there, what I could use in coming years, not so much for this year, but basically information gathering. That's what I'm here for.
Brilliant. Come to the right place, hopefully. As I say, I think it'd be great to have a one-to-one with you after the session to talk about the sale of your business, because there's lots of areas that you can be doing to effectively save on that tax that you would obviously have to pay. So let's pick that up after the session, perhaps. Thanks for that. Stephen?
Hi there. Sorry, I've not done a video today. Yeah, just basically just interest really, just to get kind of a bit more knowledge on the area and just see if it can help me in the future or help me plan out. Just kind of knowledge gathering really.
Brilliant. Brilliant. Thanks ever so much. Benazir?
So I'd just like to hear what you have to say, get some in-depth knowledge from you, get your expertise. Complements my own business, so I'm quite excited.
Great. Thanks ever so much. Who do we have next? Natalie?
Yeah, hi. I'm really similar to Laura, actually. So I also started a business in the pandemic. So I will be looking at all of this for my own kind of records really shortly. So definitely just interested in the topic further.
Brilliant. Thanks, Natalie. Nicole?
So I'm actually a graphic designer, and I am based in South Africa, so I know our laws and tax is slightly different. But I do a lot of work with UK clients, and being a designer, I'm actually useless in tax or understanding tax and finance. So I read your posts and I really enjoy, and it would be really nice to get to know more about tax and the financial side, especially working with UK clients. And
Brilliant.
sorry that my video is off today. Sorry, guys.
No, it's okay. Yeah, if you guys want your videos off, that's absolutely fine. So where did you say you're based, Nicole?
I'm actually based in South Africa.
Oh, okay. Yeah.
Yeah. Sorry, is the background noise a bit loud?
No, it's fine. It's
Okay.
not bothering me.
Okay.
Lovely.
Right.
Fantastic. Thanks, Nicole. Again, might be worthwhile picking up with you after the session as well to talk about that in more depth, especially if you're dealing outside the UK.
Sure, of course.
But we can obviously have a one-to-one after. And Christine?
Great.
Hi there. Hi there.
Yeah. Hi. So I've just started my first full-time job, or properly anyway. I did work full-time previously, but it was in between finishing my undergrad and my master's. So that time all of my money was going towards saving for my master's. But now that all of my education is finished, I'm just trying to become a lot more smarter with my finances and looking ahead and just become a bit more financially literate really.
Brilliant. Brilliant. Thanks ever so much for that. Lots of people just starting new roles and jobs, which is great to hear. And Roxana, you just turned up.
Hi, how are you?
Hi there, how are you?
I'm fine. I guess you're looking for what I'm looking out of this webinar question, yeah?
Yeah, exactly. What you hear today?
Well, I'm a chartered tax advisor, so I know a little bit about tax, but I guess I'm just looking at what's the best way to help our clients in terms of investments, and also looking at some future tax strategies. So what do you think is going to happen in the future as far as the budget and the future is concerned?
Great. Okay, so that's the main point of today really, is talk about the future of taxation.
Yeah.
I'll be covering that off in a minute, but certainly in regards to tax efficient investments, I'll be kind of talking about that at the end. Yeah. I don't know if you were here at the beginning of the call, but we have a kind of a tax health check that I've been taking clients through.
Okay.
So that might be a useful exercise for some of your clients. But it sounds like we've got a big kind of broad spectrum in terms of knowledge in the tax space. So I'll try and keep this as kind of high level, as simple as possible, because obviously I understand that there's people in the room that perhaps don't know much about this area. But as I say, I'm more than happy to pick up any bits and bobs after the call with you guys individually if you wanted to. But thanks for all that information. So as I say, first of all, I'm going to talk about the future of taxation. And it's just quite timely because we've got the budget coming up next week. And I'm sure some of you guys have seen in the press and in the news recently what discussions there are around this. What do you guys feel might come up next week? To kind of put the question to you guys before I get really started on this. What do you think is going to come up on the 3rd of March? Any ideas?
Usually sin tax, the alcohol and the cigarettes.
Sorry, say that again.
It's usually the sin tax, so the alcohol and the cigarettes.
Oh yeah. yeah. Okay. Good one. Anyone else?
Yeah, there's always the fear that he's going to increase capital gains tax.
Yes, that is a big one. Indeed. Yeah, so I'll be covering that in a little while. People that they're saying that they might actually put that in line with income tax. It's effectively doubling the amount of CGT that you'll be paying. So that would be a big one. Anyone else?
I guess corporation tax rates will probably go up. I'm not sure. Though.
Yeah.
I think there's a bit of a grey area with that one.
Yeah, corporation tax obviously quite low compared to other European countries, 19%. So they could be looking at increasing that. So I think I heard every 1% increase in corporation tax is effectively putting in £3 billion worth into the economy. So that's certainly an area they might look at. Anyone else?
Inheritance tax?
Yeah.
Business property relief and agriculture relief, I think.
Yeah, IHT.
Get rid of the CGT uplift.
Yeah. So for those that don't know, you basically got two major capital gains taxes. You've got capital gains tax and you've also got inheritance tax. I'll talk about IHT in a minute. Anyone else? Anyone else got any ideas of what might come up? There's quite a lot there. Okay, great. Thanks for that, guys. So does anyone know the difference between, or have the guess what the difference between what the government has spent this year versus what they've gathered in via taxation? What do you think the number is roughly? And I'll give you a hint. It's in the high billions. Shout out some numbers.
I was actually going to say 1 trillion, but never mind. But I don't think it's too far off that. Probably about 800, close to just short of 1 trillion.
Okay, yeah, just short of 1 trillion. Anyone else throw out some numbers? It's a high figure.
100 billion.
400 billion. There we go. Spot on. 400 billion. So that's the amount, the difference between what the government has spent this year and what the government is actually bringing in. Another interesting statistic, if you want to call it interesting, the Office of National Statistics said that in January, the net borrowing was 8.8 billion. So we're actually in a deficit for the first time in 10 years in January. Now, bearing in mind, normally in January, there's a surplus, so we're actually bringing in more because of the tax year end of 31st of January. Everyone's obviously returning their tax returns, but it's the first time in 10 years that there's a deficit. And debt, if you want another statistic, is now 97.9% of total GDP. So GDP is gross domestic product, the monetary value of all the money we're bringing in from our goods and services. So quite clearly, there is now a heightened discussion around how we're going to be paying for this debt. Now, I'm sure all of you know, because interest rates are so low at the moment, the base rate is now 0.1%. Actually, servicing this debt is actually okay. And also, it kind of in some respects, we're actually in negative interest rates in some areas. So servicing that debt is okay. But quite clearly, if we keep going down this path that we're on, it's not really that's sustainable. So at some point, we're going to have to put our finances in order and balance the books, as it were. But it's interesting because a body called the International Monetary Fund and also the Chancellor have all kind of come out and said broadly the same thing, in that we don't really want to do anything about our kind of tax strategy, i.e. taking more tax out of the economy, before we really get the economy going again and on a stable footing. It's almost like the UK economy and almost the global economy is on a kind of a life support system. Do we really want to shake the boat that much this early on? So I guess in lead up to the budget next week, whilst there might be some expectations or even concerns around tax changes that we might see, there is a kind of I guess a general feeling that we might not get any tax changes on the 3rd of March. But remember, there is another one coming up in October this year. So what we might see is some sort of roadmap coming out as to what the future might look like, or perhaps a consultation that might be had. But of course, you know, with any budget, the chancellors have a habit or delight, I suppose, in almost producing fiscal rabbits out of the hat at the last minute. So we don't know what's going to come up. All we can do at this stage is speculate. And that's exactly what I'll be doing for the first part of this session. Any kind of thoughts on any of that from anyone? No? So, okay, so what could we see come out? Well, does anyone know what the 3 biggest producers in terms of tax there is, in terms of, so some of you mentioned some earlier, you've got corporation tax, CVT, IHT. What are the 3 biggest producers, do you think? Some for the accountants here, because I know there's some accountants in the room, you guys should know this. Okay, so
personal taxes? Sorry, personal taxes?
Personal taxes, yeah. What comes under personal taxes? Okay, so the three biggest ones are national insurance contributions, income tax, and VAT. So they're almost the big 3, and between them they generate around 450 billion worth of tax revenues. So naturally, you would think these are the first to kind of look at because they're the biggest generators. But actually, in the Conservative manifesto last year, they actually said they weren't going to change those 3. So those 3, you might argue to say they're safe. However, of course, they can make a U-turn on that quite easily if they really wanted to. What they might start doing, therefore, is looking at almost freezing personal allowances or thresholds that we have. So the government could effectively giving less back or leaving less money from taxation. So that's something that we could see. Personal allowances, for example, come into kind of the tax-free income that we receive every year, for example, 12,500, or tax-free capital gains, which is 12,300 each and every tax year. So those are the kind of examples. So that could be what could happen. But my guess is there might be changes looking at corporation tax, capital taxes, which is effectively capital gains tax and IHT, which has already been mentioned. Pensions, we might see a change in that. We might see, which is quite controversial, I think, is something called a wealth tax. I don't think the government are going to go anywhere near this, but I'll cover that off in a second, exactly what that might mean for us. Any thoughts, questions so far on any of that? Stunned silence. Okay. Right, so let's start with corporation tax. Who mentioned that earlier? I think that was Oksana, was it? I think it was. So corporation tax is quite low, 19% at the moment. They're estimating that in this tax year, it's going to generate around £48 billion, which is actually quite low. And you can kind of link this to the lesser of the economic activity that's been generated because of the pandemic. So will the government look at increasing that? What you've got to think of is a low corporation tax rate effectively retains attractiveness of the country. Yeah, effectively now we're out of the club in terms of the EU. So we want to try and attract as many outside businesses as possible. However, if we were to look at other continental European countries like France, for example, France's rate is now at 32% and Germany is at 29%. There's clearly some headroom here that we can actually start increasing corporation tax, which will affect us as business owners of limited companies. So that's something to bear in mind. As I said earlier, every 1% increase in corporation tax will give the UK economy an extra £3 billion boost. So that could easily be looked at. But as I said, the government does need to be quite cautious in not upsetting the economy. So I guess what could be looked at is essentially a kind of an excess profit tax for businesses that are doing quite well. This would be particularly pertinent to, I suppose, big companies like Google and Amazon, for example. Or there could be kind of an extra digital services tax, for example. And indeed, the Labour manifesto last year actually suggested a corporation tax of 26%. I don't think we're going to go there, but you never know, it could happen. So things to perhaps start thinking about in regards to that. So that's what could happen with corporation tax. And I'm going to quickly whistle through the next three. Capital gains tax. I think this is going to be a big one. Both IHT and CGT have been looked at by the Office of Tax Simplification, which is effectively a treasury body that looks at taxes as and when the Chancellor asks. And Philip Hammond previously asked the OTS, the Office of Tax Simplification, for considerations before, and he asked the question about IHT, but they laid their recommendations and the government haven't done anything yet. My guess is that's purely because of Brexit and the pandemic, and they've had just other things on their mind. But our current Chancellor, Rishi Sunak, has again gone to them and said, right, what do we need to be doing here? And effectively what they've said is that they might put capital gains taxes in line with income tax rates. So that will be massive. Current income tax rates, 20, 14, 45%, depending on how much income you're bringing in. Current capital gains tax rates are 10 and 20%. So that will almost be a doubling in the amount of tax you'll be paying on any gains arising from a sale of a property or stocks and shares, a sale of a stocks and shares portfolio or something like to that effect. So that's definitely something to start thinking about. Making uses of the allowances therefore each and every tax year to make sure you're not paying that tax as much as possible. What they might also start seeing is effectively no rebasing on death. So what normally happens is if you're married and you pass assets to your spouse, there's no CDT on that. But what they might start seeing is actually your spouse might be receiving the based price for that asset. So we could start seeing that, or we could start seeing a reduction in the annual allowance, that 12,300 amount. We could see that reduced. But as with all this, this is just speculation. I don't know for sure, just giving you guys some ideas. Any questions, thoughts on that quickly? No. Okay, final two then. Pensions. What could we see here? There's always a potential change to pensions. Every year, there's about £40 billion worth of tax relief that go into them. So for those that don't know, if you have a personal pension and you pay into it, you get tax relief going in depending on the tax band that you're in. So if you're a basic rate taxpayer, you'll get 20% relief going in. And if you're a higher rate, you get 40%, and if you're additional rate, you get 45% relief going into a pension. So really, really, really tax efficient vehicle to be utilising as much as possible. Now, in September last year, the government said they've got no intention of reviewing that tax relief, but of course, as I've said, that could change. And what has been suggested is there might be a flat relief rate across the board. So rather than 20, 40, 45, there might be a 25, 30% just flat rate relief going in. And what that will effectively do is give greater encouragement to lower rate taxpayers and less to high rate taxpayers to save into a pension. So that could be looked at. And the final thing, and this is the most controversial tax I think, and I don't think this is going to come in, but you never know, is a one-off wealth tax, i.e. a COVID recovery tax. Okay, this has been brought about because of this thing called the Wealth Tax Commission, which is effectively not a government body, but a board of consultants and lawyers, effectively. And what they've said is each UK individual, if you've got assets over above 500,000, they will put a 5% tax charge on your total estate, which should be taken in 1% increments every year over 5 years. Now, the challenge to that is, well, what if I've got very liquid assets? Most people's money is in main residence and pension funds, I would have thought. And obviously, that's not very easy to take money out of those. So how does one go about paying that tax if they were going to implement it? Nothing's actually been thought of via the government in regards to implement this. And if you think about the kind of the philosophy of the Conservative Party, it certainly goes against their way of thinking, I suppose. And both the Chancellor and Prime Minister have said as much this year. So I don't think that's going to come in, but certainly it's been discussed. What's more likely, I think, is kind of some form of capital tax and reform of those, or perhaps some form of kind of council tax as well. So I'm going to pause a breath there. That's what I think might come up next week, or something to that effect, or indeed might come up in the October budget at the end of the year. Does anyone have any thoughts, questions on any of those four? Stunned silence in the room. Roxana, I know you wanted to cover off the kind of what I thought might be coming up. Do you agree with those statements, being a tax expert yourself?
Sorry, I muted myself.
It's okay.
No, I think you pretty much covered what I would have thought. I think there might be some element of wealth tax. I know you feel it's kind of unlikely, but my view is there's going to be something in there. I think there's going to be something.
So I didn't quite hear you at the beginning there. You said some element of
wealth tax.
Wealth tax.
Yeah, I think there's going to be something. That's my personal view, not just a gut feeling. That's all. Because a lot of people have made lots of money out of the UK, so really, yeah, this is in terms of fairness. I think I'm not sure, but my feeling is there is going to be. It might not be as excessive, but I think there is going to be an element somewhere along the line. Yeah, that's my personal view. Yeah?
I think it certainly be controversial. I know. I think the Labour suggested it. I think in the early 2000s, and it was quickly gotten rid of and said it wouldn't work. But we'll have to see. I think at the end of the day, as I said at the beginning of the call, there's a massive deficit that needs to be plugged. So this money's got to come from somewhere.
But I also think, yeah, if you look at the situation in 2000 and some of the things we would have never even thought about doing, we're doing now. You know, who would have thought all that money that the government is giving in furlough and bounce back loans? And I honestly did not think that would have been possible. You told me this pre-March 2019, yeah?
Yeah.
They said you're mad. So
Indeed. Anyone else got any thoughts on anything that I've spoken about? No? Okay. So what I'm going to do now for the rest of the session is go through what considerations do you want to be making before the 5th of April. Now, as I said, we've got a really useful exercise that I'm more than happy to go through on a one-to-one basis with anyone here, which is a tax health check. So I'm going to quickly bring that up now, and I'm going to share my screen with everyone here. Here we go. Okay, so can everyone, let's get rid of these ones. Can everyone see that okay? Okay, so again, all this is effectively just a kind of a guide. It's a 12-page questionnaire that allows me to go for someone's personal situation and go, right, this is how much you've got into an ISA, for example. Are you worried about kind of CDT? Are you worried? Are you going to be retiring soon? Are you worried about kind of estate planning like it was, sorry, it was mine, isn't it? Like if you're a business owner and you're looking to sell, what things might you be wanting to think about? So it's just a rough guide in order to help stimulate some conversation around this. So I'll just go through this quickly with you guys now. Then I've just put in my some rough details. Don't pay too much attention to those. But the first page is all about investments. What tax efficient investments can I be utilizing to shelter my money from the tax man? And the first thing is super simple for everyone needs to be doing each and every tax year is utilizing your ISA. Okay, very quickly, an ISA, completely tax-free environment. Put your money in up to a limit which is £20,000 each and every tax year, and any money that grows in that environment grows completely free of tax. It's also very liquid, so you can take your money out whenever you like. Again, completely free of tax. So highly recommend. It doesn't have to be 20,000. You know, if it's just a few hundred, at least you've utilized part of that tax year's allowance, because on the 6th of April, all that then restarts. So please utilize that as much as possible each and every tax year. But on another note, there are other things that one could be doing. So for example, as I mentioned earlier, everyone has some allowances that you could be utilizing. So each and every tax year, everyone, for example, has a £12,500 personal allowance for tax-free income. Why do I mention that? Well, if you are in a marriage or civil partnership, what you could do is, if you've got an asset that is generating you a significant amount of income, potentially is transfer that asset to your spouse. They would then be utilizing their tax-free allowance, £12,500 in their name. So that could be like just one example of a particular tax planning strategy around utilizing the allowance. And also, everyone has got a savings allowance of £1,000 for basic rate taxpayer and £500 for high rate taxpayer. So if you've got, it would have to be a significant sum of money sitting in a bank account these days, because if you take interest rates low as they are, Bank of England interest rate is 0.1%. Say you've got a bank account yielding you 0.2%, you would have to have roughly about £600,000 in that bank account to be paying any kind of tax on that. But it's just worthwhile knowing about that. And as business owners, you'll all know we've also got a dividend allowance every year of £2,000. So highly just thinking about that. Are you utilising those allowances each and every tax year? And if you're not, what planning opportunities are there around doing something about those allowances? And that's something I can do to obviously help with that. Okay, so that's what that first page is all about, having a discussion around that. Questions, thoughts? Okay. Oh, I'm going to put my there. Okay, so capital gains taxes. Okay, so again, every tax year, we will get a £12,300 allowance. 6th of April, that restarts. So use it or lose it, as the saying goes. So you may want to consider actually realizing some of the gains that you've made. Important to note, if you've got money in ISAs and pensions, that doesn't matter, but certainly if you've got money in other stocks and shares portfolios that you do have to pay tax on, it might be worthwhile realizing those gains and taking that money out because that will be tax-free. Okay, and also ask if you realized any capital gains tax in the previous 3 years as well. So something to worthwhile to kind of bear in mind. I mentioned ISAs already. Pensions, for those that don't know, every tax year, people get a £40,000 allowance to put into a pension. Again, important to utilise that as much as possible if you can afford to do so. 6th of April, that restarts, but pensions, as I've already mentioned, you've got tax relief going in, but then it's a completely tax-free environment into which to grow your money. So important consideration there to be utilising that as much as possible. And then you've also, to help with this, is you've got things like VCTs and EIS schemes. Now, Marla, this might be something worthwhile thinking about for you, or indeed if anyone here is perhaps looking at selling a business. Effectively, what VCTs and EIS gives you are tax credits off your income tax liability, up to 30%, depending on how much you're putting in. Quite a complex area, venture capital trusts and enterprise investment schemes. Effectively, what the government have said in these respects is to help encourage investments into smaller businesses. They are giving those that invest into these schemes huge tax breaks, really significant tax breaks, both for things like income tax, but also for inheritance tax as well. So I won't go into those two areas just for this call, because it's quite a complex area that, but if anyone wants to kind of pick my brains on those two areas, please do let me know, and I'm more than happy to spend some time going through those in person. The third one is pension contributions, but we can start thinking about retirees for this one. So if you are getting close to that retirement age, it might be worthwhile thinking about, okay, well, where can I take my money from? Now, an obvious route would be, right, well, I've built up a pension. Why don't I take income from the pension? But is that really the best area to take it from? Because you might have money in ISAs, you might have money in cash, for example. And because pensions are growing tax-free aren't receiving tax on the capital growth, but also free of IHT, inheritance tax, it may actually well be the worst place to take money from in that regard. And I guess this is where the benefit of having advice in this area really comes to its fore, because effectively we want to make sure that you are optimizing the continuing use of your capital as much as possible, and you may need advice in regards to, right, what aspects, what pots of money can I draw money from as tax efficiently as possible. Again, making uses of all the exemptions and allowances every year. So things to worth bearing in mind. So again, pension contributions, have I contributed? And taking your benefits. When do I want to be taking my benefits? Well, for me, it's going to be for a while. Okay, gifts. This is all around kind of inheritance tax planning. Am I using my gifting allowance, which is £3,000 per year, which you can gift to someone else, and that effectively then falls outside of your estate? If you haven't used the previous year, you can double that as well. So something to worth bearing in mind if you're going through kind of an estate planning, IHT planning exercise. And then the assets that you have. So this is around kind of intergenerational wealth planning. Any more than assets in any more than £325,000, you may start paying some inheritance tax on that. You've also got a resident nil rate band of £175 that adds on top of that. So in effect, anything over 500, you may start paying inheritance tax on your death at 40%, or your beneficiaries will anyway. So something to, and that might be a kind of a planning area there. A really good thing to start thinking about perhaps is if people have children, and we actually covered this on last month's workshop, is how to gift money to children and put money into tax-free environments for your children in the areas such as junior ISAs, for example. Again, what you're effectively then doing is putting money out of your estate and investing your money for your children, again, in a completely tax-free environment. So that's another area that you might start wanting to think about. Each and every tax year, the child gets a £9,000 allowance. But also, actually, you can put money into a child's pension at the same time. So there's all that money you can take outside of your estate tax efficiently. So another consideration there. Finally, have you received any inheritance in the last 2 years? Won't cover that too much in this one. I'll just click no there, and then you submit. Now, what that then does allows me to then go through that with yourself, and as I say, a quick tick box exercise to make sure that all the bases are being covered. Any questions, thoughts on any of that so far?
David, can I
yes.
ask a question?
Hi there,
Thank you. Yeah, regarding the pension, so there are two ways of contributing into pension, personally and also via the limited company if you're director and shareholder of the company. Yeah.
Yep.
So when, well, in one of my sort of talks, what's the best way to sort of to understand if the director of the limited company is in a position actually to start investing that? I understand the corporation tax relief, and then the director would have to look at the personal tax at the same time. But when I don't do their personal tax, somebody else does for them, doing this for them. So I don't know the whole situation of the director. So what would be like a catchphrase for me to give them to basically to recommend to take the IFA advice for them?
I'm not sure I've understood your question. I'm sorry. So obviously the tax relief going into a personal pension versus director pension is very different.
Yes.
Okay. So can you just?
Yeah. So it just because I don't know the situation of the director because I don't do the personal tax. So all I can say is just that there are two ways of investing into pension, personally and via limited company.
Yes.
But the question they ask, what's the best way? So, okay, I say, talk to your IFA. They say, oh, I don't have IFA.
Right. I see. Okay. Yeah. I mean, so I think I've understood your question correctly in terms of, okay, which route should someone take? So for those that aren't aware, when you're paying into a personal pension, as I mentioned earlier, you'll get tax relief going in depending on the tax band that you're in. So basic 20, higher 40, an additional 45. So amazing tax relief, especially if you're a higher and additional rate taxpayer.
Yeah.
But as a director, as you've said, you will get those contributions will be classed as a business expense and therefore taken up before corporation tax, like you've said, which is 19%. So what's the best route? Well, clearly, if you're paying in personally, you will get far higher tax relief than the 19%. However, if you're a business owner and you've got kind of spare cash in the business doing absolutely nothing because it's just sat in cash, how can I extract my profits in a tax efficient way, take money out of the business and also investing that money, which also then goes completely free of capital gains tax. And that's the route that you would argue for directors to start putting into people's pensions. You could also then do it for a spouse, but you know, that's the kind of argument that I would suggest, is saying, well, has that answered? I'm not sure if that's answered your question or not. Is that?
Well, in a way, yes, but I'm sort of so I would, the simple recommendation I give to the client is just you need to talk to IFA. But I can see a lot of people are reluctant to do that because they think they're not wealthy enough, and they think they don't want to share some maybe sensitive information. So the trust always the problem, I guess, in that situation.
Yeah, indeed. I mean, I don't like the term wealth management, because obviously it derives that you need a lot of wealth in order to help a manager. I don't like that at all. I truly believe that no matter how much money you have, there are things we could be doing to help that particular client in that particular situation. You know, it could be as simple as, well, actually, if you are struggling month from month, how can we help you save better? You know, how can we help realizing how much actually you need to be bringing in or cut down on certain costs? It really is a simple exercise like that. And there's certainly a lot of things we can do for those kind of clients. So I certainly wouldn't be put off if speaking to anyone that, you know, thinks they don't have enough. There's always things we can do to support that person, just on that point alone. But yeah, I mean, look, if you've got anyone in mind that you think needs advice and guidance on that, more than happy to speak to them.
Okay, sure.
I just hope I've answered your question there. I think it's not always an easy kind of black and white answer with this stuff. It would just depend a lot on their personal circumstances to whether or not the personal versus the director would be more suitable for them.
Thank you very much. It's great. I know it's not black and white answer. I was hoping maybe there is one.
Not necessarily. Again, it just involved having a real good chat with the person involved. But I would imagine it in most cases that if you are a business owner, it definitely makes more sense having a director's pension, because, as I say, you're extracting money tax efficiently out of the business that way.
Yeah. Okay. Yeah, thank you.
Yeah. Anyone else? We've got about 5 minutes left before I finish off. I know, kind of, Marley, you had some specific questions around selling your business. Now, I'm aware I haven't really covered that in any great depth today. So do you have any more kind of specific questions perhaps around that?
Well, I think it was more because I don't just, I have overseas shareholders, which is family. So it was for me, some of the questions was how they can bring their money back in, or does it have to leave the country if they don't really need the money overseas, but the business was here, they're resident overseas, and how do we use that, and how do they give gifts out of that? So it's fairly specific, my questions.
Right, okay. I'll tell you what, shall we have a chat after this about that? Because that could take a while.
Yeah, no, I think it's a bit more complicated than what you're doing here.
Yeah, let's if you're free later on today, let's pick that up, shall we? Because just wary that we only have 5 minutes left, but certainly we can have a chat around that. Okay. Any more from anyone else before we kind of close off here? I'm going through the questions that everyone had. Okay. No more? Brilliant. All right. Well, guys, thanks ever so much for coming along. Also, the session has been recorded, so I will be emailing that out to everyone if you wanted to kind of re-go through anything. As I said, if you wanted to kind of go through the tax health check with me in person, more than happy to spend some time with everyone here, half an hour, just kind of going through your own personal situations. I know with workshops like this, you don't really want to be sharing too much with everyone else in the room. You want that kind of individual touch. So I think what might be best, if I just put my details quickly into the chat box, put my mobile number in there, so everyone's got it, and then also my email address. Drop me a line, booking some time with everyone. I will be doing another workshop at the end of next month, which is hopefully be far more exciting. We saw them on cryptocurrency and the weird and wacky world of that. So it's something that I've been interested in for some time now, and I invest in trading personally. So that'll be the next one. Link on this website. Hang on, I'll put it in the chat shots, financialmentality.com. All the events are on there. And then the one after that, I'll be doing a session on ethical investing. So these kind of newfound ESG funds and what we are doing in that space. And then I'll think of something else for the topic after that. But yeah, come back if you wanted to. Say each month we'll be talking about a different financial topic. And thanks for everyone for showing up. Hopefully it's been of interest and taken something away from this, at least.
Thank you very much, David. Yes, have a good day.
Thanks so much.
Bye.
Thank you, everyone. Cheers.
Thanks,
Bye.
David.
Bye, David. Bye.
Bye.